Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Monday, February 13th, 2023. It's now the 12th. We start off in the S&P 500 daily chart in DeMark looking back to end of October 2021. I'll zoom into the current area now. The S&P daily chart has printed the combo and sequential buy setup 3 count. And to negate that for end of day Monday on the 13th, there must be a close above 4164 for the price flip to the sell setup count 1. The relative retracement disqualified up 1 was qualified on Friday's bar. And to get that confirmed for end of day Monday, first there must be an open above this close on the 10th. Then tick higher than this true high close over here, 4164, and then close above this close from the 10th. And price in the pre-market hours on the 12th at 5:20 p.m. for the S&P 500 is 4083. The trend factor disqualified down 1 could become qualified with a close below that level and keep going and get underneath the momentum down for 50%, and that gets qualified for end of day. Trend factor down 2 and get under the TDST level here, and all of the above becomes qualified to the downside. And price is still under the disqualified by TDST levels, and the conversion line is right there also, so that's formidable resistance. And the channel 3 high is starting to roll over a little bit, and the low channel 3 here is drifting down too. This ongoing supply line, which for Monday is at 4165.35, could become qualified with an open above this level and tick higher by a couple ticks higher than this. And failing to do that at the open, it could become qualified if it makes it up to 4120.13, so right around here, and then subsequently closes above it, and that would become qualified. A bit far-fetched. And this demand line for Monday is at 4012.75 and would become qualified with a close under that level at 4012.75. The NYA top caller chart, we'll start off with the NY8 SPX ratio, basically value versus growth, showing the tech rally is stalling and just about failing. And the ratio has turned around before it can make it to this solid red support and resistance line, and is headed back to the top of the ascending triangle that value broke out of some time ago. Growth came back down below the apex right here, and it's going to get back above it, it looks like. Let's see what happens if it stalls there. If it makes it back up into it, then that's a right-angled and broadening formation similar to what the S&P 500 is in now in the daily chart. So let's see what happens here, but don't count tech out until it either gets back into this formation or back above it and starts heading up towards this horizontal line here, and then the next one. And the NYAD has rolled over and is heading back towards the top of the descending broadening wedge pattern it broke out of. And the 50 EMA in green is right there to meet it, and the 200 is underneath it in black, even though it shows red over here. Can't explain that one. And the New York ratio adjusted McClellan breadth oscillator has fallen below zero after forming that nice complex pattern well above zero. That went on for a while pretty good. So maybe this is just a bounce down and then another bounce back up. And it looks like NYA price made it back above this horizontal green line that joins these two W peaks here. So that green line is approximately 15,850, and you can see in the thumbnail there was a close 15,910.69. And the ratio adjusted McClellan volume oscillator has fallen under zero also. It did not form as nice a complex pattern as breadth, but it did form one up here above zero and then fell out. And the New York ratio adjusted summation index of the New York McClellan ratio adjusted breadth oscillator, you can see that it made it up to 1100 and is starting to roll over. Prior to that, the highest one was up to about 800 and rolled over. So now we need to see if it fails at 500 again and goes under zero, or if it starts looking like this a little bit, come down to 500 or near it and then go back up. Here's the closest one that looks like the current summation index for breadth back in 2012. You can see here it made it up past 500, about to 800, and almost went under zero, but then it went past 1100 here up to 1300 and then straight down, and except for this little dip here, it went back under zero as a fail. So it does happen from high levels, the failures, but most of the times it gets up there and kind of stays up there as everybody gives it a chance, gets near 500, and then the buyers come in again and run it up, but eventually it will make it back down below zero. So we'll monitor this and give it the benefit of the doubt until it makes it below 500. Same thing with the ratio adjusted volume summation index of the ratio adjusted McClellan volume oscillator up here. Give that a chance until it gets under 500. Last time we looked, the RSI 14 hit that 65 green line here and was not under its 21 EMA yet, I don't believe, but it made it below it, tried to get back above it, and looks like it bounced pretty much right off of 50. Let's see if it can hold that 50 equilibrium line. Same thing with on-balance volume. Let's give that a chance. You can see here, if you drew a line with an arrow, it would be just the slightest higher high over here. So let's give that the benefit of the doubt too until it breaks back under these trend lines here in dashed red. And the New York stocks only AD line here, and the breadth oscillator for it, the McClellan breadth oscillator, is living in the bearish divergence. Looked like it had a chance it was going to get above there and maybe start hitting that arrow and pushing it up, but it fell off and is down below zero here for the breadth oscillator and hitting some pretty big low levels down here. And the intermediate term volume oscillator didn't really make a new high, pretty close, but it did make a higher high from here and is rolling over and headed down below its signal line, below this dashed red horizontal line. So let's give that the benefit of the doubt also until it makes it under this valley right here. and we'll be getting a lower low. Just about the same for the intermediate term breadth oscillator, except it did make a higher high from this high peak over here, so a major new high. So let's see if it can stay above this valley too here. And then if it doesn't, it's still not a major lower low until it gets back under here. So right now we have a higher high, and then even if it gets back under here, we'll still be living in a higher low until it gets down here, and that's that October low. So we're living in a higher high at least. And the stocks in the NYA above their 200 simple moving average really had a nice run, made it above 70 and fell out. It's in between the 60 and 70 zone. I would have been happy with some sideways action between 60 and 70, so let's see if that pans out, can stay above 60. And the NASDAQ 100 NDX high-low shows no indication of going under the 10 EMA in red, meaning the blue going under the red, and that coinciding with the ROC 12 around +5 or -5, somewhere in between there. So it's a long way from going under there, and the ROC is quite elevated here at 544. And the short-term KST is staying above 0, not exactly advancing too high, but around 0. The intermediate term KST made it above its signal line and is headed up. Same thing with the long-term KST. Both of those are headed up, so I don't see any danger of the blue going under the red in any time in the near future. And the NASDAQ composite high-low shows the 5 EMA in blue just about going under the 10 EMA. They both went down simultaneously together here, but you can see that the 5 is still a few cents above the 10 in red up here in the left-hand corner. And the ROC 12 is already at -6.12, so that would have been a failure anyway. Also take notice of the NASDAQ 100 in orange here, and the composite COMPQ in black have somewhat separated these past week or so, and that's a good indication of the NASDAQ 100 standing on its own against the composite. You can see they run together a lot, especially on the uptrends. And the composite short-term KST is just skating right along 0. It's at +3.59. Intermediate term KST rolled over under its signal line, headed down. Long-term KST went above its signal line and headed up. And those two together like that is indicative of sideways action, and you can see it here. It's been going sideways, the blue line, and finally took a turn down, but it could be range-bound activity for the composite itself, and that will mean range-bound activity for the big fat cap megatechs in the NDX too, more than likely. And the New York high-low looks like the 5 is still pretty far away from the 10 in the thumb, and the ROC 12 is skating right above 0. It's at 4.88. So hey, this could go under and give the signal, but it would have to be one of the others in the either the COMPQ composite or the NASDAQ 100 that will decide if there's a shorting opportunity or not. At least that would make it easier to have one of the other ones do the same thing. If not, and this does it on its own, all that means is that you have to dig a little bit deeper for individual stocks to short. And the KSTs look the same as the NASDAQ composite. Short term, just kind of skating along above zero line. The KST intermediate term rolling over, and the long-term KST heading up still. It's up in the nosebleed area though, so I would expect to see that start getting a downward trajectory, but not right now. So this is again indicative of range-bound activity, so it's pretty safe to say the markets are going to be in a range-bound regime for a while. The NASDAQ composite overbought oversold chart also has the ratio adjusted summation indexes for the NASDAQ composite on top and the NDX NASDAQ 100 on the bottom, and this is separating the two from the NY summation index, which is at 1100, so this is part of that but separated out. And you can see the NASDAQ composite made it over 500 and is starting to roll over, and the NDX NASDAQ 100 big fat cap mega techs are not even to 500 yet, and they're rolling over. And here's the NASDAQ composite overbought oversold indicator. Last time we looked, the 30 EMA in green was hitting this green horizontal line here that represents all-time highs for that 30 EMA. And it was benchmarked back here in February of 21, so it visited that and then turned around and is headed down towards zero. It's out of the overbought area and headed for what I call the neutral zone between the overbought and oversold. So it could bounce around in there like this and then head down here or go back up. We'll have to wait and see, but it's headed towards zero now. And the CBOE total put call ratio chart is showing slight instances of failing again. In the thumbnail you can see right where I have the cross, the KST for the put call went down, and on that day the S&P 500 went down too. So I don't like to see that, and some of that could be still options traders day trading out of the money calls for end of day. It's way over my head, that is, but it's something the retail traders caught on to, and now the institutions and heavy hitters are doing it on a larger scale. I believe that's why this failed back in 22. There was a lot of that going on. But anyway, it righted itself. It went under the line here at about negative 150 and went back up, and the signal line was crossed right here. So this could be it straightening out from this downdraft here, even though there was a slight tick up on Friday and a tick up here, which is not a good sign either. But overall, the S&P went down and the put call went up. It's just not as pretty as it used to be back in this era here, free money era. The HYG to IEF relative performance ratio, and that's junk bonds versus the 7 to 10 year Treasury bond ETF. I would look at this in amazement lately, but now it's actually frightening me a bit. It's so far up and to the right corner here, and just keeps bouncing off of this uptrend line here. It just looks like it's going to break under there, and when it does, I think it's going to get ugly. And you can see the ratio up here is higher than back here in November of 22, but the MACD is still hovering around 0. It's nothing like it was back here in November 22. So yeah, that's very concerning to me. However, if the 10-year yield continues going back up, and it looks like it will, try to get back to the 4.0% or maybe a little more, that this could stay around this line for a while, but will eventually break to the downside, and I think it will be quite significant break. And the ROC 1, ATR 2, and PPO Extreme chart shows the ROC 1 just having 1% moves to the 1% positive volatility line, then back again down to the 1% negative volatility line. It's been staying away from the pain thresholds at +2 and -2, but that's still nonetheless volatility. And the PPO Extreme is at +2.380. It's nice to see it above 0. However, it has fallen underneath this blue downtrend line going back to April of 21. So it's under that. And this line shows how this was the most hated bull market in history, just about. You can see S&P going up, and this PPO Extreme just headed down, and you never know where the music's going to stop, and it stopped right here at the beginning of 2022 when price fell off the face of the earth. And the stocks above their 20 simple moving average in the S&P 500 has been managing to stay above 50. It stays in this green zone. That's a good sign. Let's see if it can get back up into there and start looking like this again, and you know you're in an uptrend. However, the bearish divergence lives on between the S&P 500 AD line and its MACD. It looked like it wanted to get above this green line right here, and that would have changed the trajectory of this downtrend arrow here to an uptrend to match the S&P 500 AD line. It can still happen, but until it does, we live in a bearish divergence. And RSI 14 for the S&P 500 daily has fallen underneath its 21 EMA signal line in red, and it has an upwards trajectory on its arrow. The on-balance volume, someone pointed out on Bloomberg that the on-balance volume since the beginning of 2022, or especially 23, but it's just been still nothing but a downtrend. So the money is still on the sidelines, and the ROC 50 is also in a slight downward trajectory there too. And the on-balance volume would be another good indication if we can get this trajectory to get pointed up like this, along with the MACD up there, right here. So if that gets pointed up, this gets pointed up, everything is pointed up, then we really have something going on. The S&P 500 support and resistance levels big board chart shows the gray areas at trend factor down 1, pivot point, and S1. And price in the pre-market hours for the S&P 500 at 6:06 p.m. on the 12th is 40.78. And to the downside is the 21 EMA S2 downtrend line from 0603.21 and the daily horizontal support from 0407.2021. To the upside is the weekly high channel 3, and get past that, then it's R1 daily conversion line and disqualified by TDST up in the 4100 zone, and the D wave down 1 and up A will print if price ticks low down to 4013.29. The S&P daily AD line is a little bit above its 21 EMA signal line. The NASDAQ 100 daily AD line went under its 21 EMA signal line by a point. And the New York traditional McClellan breath oscillator to get back to zero would require 2,597 advancers over decliners to get back to zero. Have a great day.